Yeah, hi there. This is Bernhard Koepp. Well, it's been another interesting week. So a lot of negativism in the market, a lot of the sort of negative sentiment from last week was carried through this week, and there isn't a lot of information coming out on companies this week. I mean, it's not earnings seasons or anything like that. So most of the market action has just been related to politics. So we continue to live this tariff warfare saga, and as I said last week, the next date is obviously June 28th, when the G20 meets, and there will be another handshake, hopefully, between the Chinese premier and Donald Trump. So we'll see how that goes. So there'll be a lot of nervous energy until then. On the markets, basically the S&P was down about 1.2% for the week. That seemed a little bit more, the volatility a little bit more dramatic than the actual outcome. Year to date, the market is still up 12.8% roughly, so we're still in a pretty strong market here. So if we give up some return, I think that would be actually quite normal rather than worrying about a bear market here. So it's interesting to me that our 5 best stocks today are actually healthcare stocks. So just to read them from the top down, they are Thermo Fisher, Roche, Boston Scientific, Becton Dickinson, Regeneron. So that's interesting to me because we were expecting a bit of a rotation into healthcare stocks. I mean, healthcare stocks tend to be a little more defensive, but we saw a sell-off in healthcare-related stocks actually preceding this tariff tussle volatility in the market because of the election cycle. And typically, when healthcare stocks sell off in an election cycle, that's a very good buying opportunity for healthcare stocks. So we have a very eclectic group of healthcare stocks in our portfolio for our more growth-related portfolios. So they tend to be very highly diversified companies. Becton Dickinson is one of those. Roche is one of those. Thermo Fisher, another. Abbott Labs is another one of those. So you can see these are not your typical kind of big pharma stocks, but very much in the device side, Boston Scientific certainly, and so forth. So on the bottom performers for the week were stocks like Alibaba. I mean, we've been suffering through Alibaba now for the past year. It's a very interesting company to us still. The earnings and revenues are growing leaps and bounds there still. It's obviously a 100% domestic Chinese stock. What's happening is the earnings growth is being offset by what we're losing in the currency translation from the Chinese currency into the US dollar. And given the tariff war, there's obviously a lot of negative sentiment towards the Chinese currency, the yuan. So until that cloud lifts, it's going to be tough for these Chinese stocks to do well. But our expectation is that the tariff war will come to some close at some point, hopefully sooner rather than later. And these Chinese stocks that show incredible growth, I mean, we just own the one, which is Alibaba, will actually do quite well. Other stocks that have been in the news because of the tariff war are Apple. Apple has taken a hit here just in the last week or so because of supply chain as well. Obviously, the iPhones are produced in China, so if you're disrupting these, I mean, we talked about autos last week. If you start disrupting supply chains globally for these kind of commoditized goods, that's obviously not good for margins, and so Apple is an amazing company with. It's a hardware company actually, but it has software-like margins, profit margins. So if there's a squeeze there because of relocation of production sites and so forth, that will certainly hurt. But we like Apple here. It's not an expensive stock. They have a lot of cash. They have a lot of resources. So I think we can get through these kind of short-term problems there. The other big news that we just heard, obviously on the international front, is Theresa May resigning finally from her party, and she announced she will do that on June 7th. So she will take part in the D-Day celebrations, which are every year on June 6th, and obviously in France. So she will have her last hurrah there, and then we will watch the soap opera unfold in the UK, and hopefully we'll get new leadership there and bring this whole Brexit thing to a head. My prediction is there either you'll get something which looks more like a hard Brexit, which obviously will be difficult in the short term and maybe beneficial in the long term, who knows, or you get a deal where they don't do Brexit at all. So it's a kind of a binary outcome. But in any case, I think Theresa May at this point was an obstacle to getting all this done. A couple of other data points we got this week. Home Depot had a stock we've owned for many, many years, had its earnings out. There was a little bit of weakness due to weather and lumber deflation, and there was some evidence of a housing slowdown. I mean, that's something we're watching closely, because the sort of the pillars of the economy are autos, housing, the consumer. So we don't want any of these three legs of the chair to kind of get knocked down. So we're watching housing very closely. The good news on housing is the demographics actually look very, very good. If you think about millennials, there are about 80 million millennials out there at the moment, and it's expected over the next, this came out of the home building conference a couple of weeks ago, it's expected that these 80 million millennials will create about 40 million new households in the next 8 years. And we still have the baby boomers that are around, and there are about the same amount of baby boomers than millennials. It's about 80 million roughly, and think of it this way: the millennials are the kids of the boomers, and the boomers are expected to create about 10 million new households over the next 8 years. So household formation should be a tailwind for housing, and that's actually, if you look at the demographics, housing demographics, that's something we've played in our American Renaissance theme quite nicely. Housing demographics in the U.S. actually look quite good. So one last comment on demographics. I mean, my team took part in the Future of Everything Festival that was done by the Wall Street Journal this week. And we learned a lot about certainly new technologies. They had executives and practitioners from healthcare, technology, culture, art, everything at this conference talking about the future, and it was very interesting. One of the things that struck me was on the demographic side, 50% of the workforce today are millennials. So whatever we're doing here in terms of our investments, we got to be quite sure that we, our retailers, for example, or our media companies actually cater to this community, which is this demographic. And I've often been asked, well, who are these millennials? What are when were they born? So just to give you some definitions, I got this out of Google. Millennials were born between 1981 and 1996. So they're the ones that are entering the workforce now. Generation X, which I seem to be a part of just barely, is 1965 to 1980. Baby boomers were born from 1946 to 1964. And then if you're interested, this is kind of strange actually. So my parents' generation are the silent generation they're called the silent generation. That was from 1928 to 1946. The greatest generation, which we've celebrated recently with the centennial of the First World War. The greatest generation was born between 1900 and 1920. And then before that, I guess that's the last time they named a generation. That kind of came out of an Ernest Hemingway novel called The Sun Also Rises. It was called The Lost Generation. That was from 1883 to 1900. So just a bit on demographics. The future for the U.S. looks good, and a lot of that has to do with our labor force demographics and our young population. Typically, if you have a young population, that creates a lot of growth. So I'll end it on that positive note. Have a great Memorial Day, and I'll see you next week.